Hey, what's going on, everyone? Welcome back to the channel. Today, we are talking Liberation Day. Now, at this point, I'm sure you've seen a lot of broad content on this topic, so we're not going to do a full rehash. We're going to talk about one thing in particular. Why was it that the Mag 7 companies are the ones that took the biggest hit over the last two trading days? Before we get into the full video, I am Ryan Hartung. I am a member of the research team here at the Macro Institute. And I want to remind you that we have a free weekly newsletter called Macro Monday. It's hosted on Beehive. You can find it in the link in our description. But every Monday morning, you will get an edition sent straight to your inbox. We cover data for the upcoming week, data that occurred over the past week, what we think is going on with the markets from an economic perspective. It is a great primer to get you ready for the week ahead. Okay, so let's talk Mag 7 and Liberation Day. Now, right off the bat, a potential easy answer to this question is, well, over the last few years, the Mag 7 companies have performed really, really well. So when there was a hint of a downturn, these would be the stocks that investors would sell to lock in some of those gains that they experienced. Now, that is for sure partly true, but we think that there is a bigger phenomena going on here. So let's actually look at some performance. So on the left, we have Liberation Day plus. So what I mean by that is Thursday and Friday of last week, the performance. And on the right, we have the year-to-date performance. So starting on the left, you see that it was indeed the Mag 7 that got hit the hardest on Liberation Day and then the Friday following, down 12.2%. That was down more than the broad S&P 500. And then I included some other countries here. So we have Europe, China, Canada, and Mexico. Mexico actually the best performer over the 2 days. I think people were a little surprised that Mexico and Canada were kind of left out in this initial rollout. So I think you see that reflected a bit there. But this has not just been Liberation Day. So we've been talking about tariffs and a lot of uncertainty for a few months now. It was a campaign promise of the Trump administration. So this has sort of been circling the economic community for quite some time. And I think that's what you see here in this year-to-date performance chart on the right. We'll talk about the specific dynamic in a second, but this hasn't just been a 2-day phenomenon. As you can see, year-to-date, Mag 7 down 24%. And you actually have Europe, Mexico, and China up on the year. So what is it that's actually going on? We're going to look at trade policy here. So tariffs, as we've seen over the last 2 days, come with a lot of uncertainty. The biggest thing is you just don't know how other countries are going to respond. And we don't have a lot of history with this, right? So the last major tariff legislation we had was back in the 1930s. So not a lot of people today have a lot of experience dealing with the markets during times of tariffs. But we can look at the previous Trump administration. So in 2017, Trump put on some very targeted tariffs. And what we saw is that every single country in that instance responded with some sort of reciprocal tariff or other type of response. And you can see that here, if you look at the policy uncertainty chart, the trade policy uncertainty index, we had that spike in 2017 as well, where we had a lot of uncertainty revolving what trade policy was going to be moving forward. And this is just completely gone above that. So trade policy has never been this uncertain. And we think that this Boycott America movement could become kind of a big deal, specifically for the Mag 7. And that's the key of what we're about to argue here. The biggest risk is that if you're the only one doing tariffs, if you're the only country doing tariffs, it's your former trade partners just end up finding other markets and they stop trading with you. You can see some of the headlines here on the right. We're also worried about consumption. To be honest, I could have found enough headlines and commentary and quotes to fill up 19 of these slides. So I just picked 4 across different countries. We have China calling Trump a bully. We have the Buy Canadian movement, where Canadian residents are foregoing consumption of American brands and American companies and instead looking for Canadian alternatives. The EU is preparing for reciprocal response, whether that be tariffs or other type of measures. And then my favorite title, Les Boycott. French consumers are shunning McDonald's, Coca-Cola, and Tesla. So we might see countries sort of speak with policy, and then we might see some foreign consumers also speak with their wallets. So why in particular is that a concern for the Mag 7? Well, the Mag 7 generates a ton of its revenue abroad. As you can see here, over half, so about half, 52% of the Mag 7's revenue comes from abroad, overseas, not in the US. They have heavy reliance on foreign consumers. And you can look at the S&P number and you can see that's 40% abroad. But one thing to remember is that that number is being skewed by the Mag 7. So you'll see on the next slide, the Mag 7 makes up a huge percentage of the S&P 500. So that 52% number is greatly inflating the 41% number we see for the S&P 500. So the Mag 7 are really susceptible to trade policy uncertainty, to backlash abroad. These aren't just US companies. They're domiciled in the US, but they rely on overseas for a lot of their revenue. And this is the core reason why we believe the Mag 7 not only was hit really hard on Liberation Day, but that year-to-date performance chart, the Mag 7's been hit really, really, really hard. We're going to end here by talking about some broader implications this could have for the S&P 500. Now, if you look at the chart on the left, you will see that the S&P 500 has not been this concentrated in at least 30 years. And you'll see why from the pie chart on the right. Currently, the Mag 7 makes up 33% of the index. Now, it's an index of 500 stocks and 7 names make up 33% of the index. This will take care of itself, obviously, if the Mag 7 continues to underperform as strongly as it has, right? That will balance out a little bit. However, from where we currently stand, it's really difficult to see a world in which the Mag 7 is underperforming as strongly as it is, and we see any type of, I guess I'll say, acceptable performance from the S&P 500, right? So if the Mag 7 is really, really sensitive to trade policy uncertainty and, the policies and the perceptions of governments and consumers abroad, that makes the S&P 500 sensitive to the same exact things, right? If those 7 companies make up 33% of the index. So that's the main thing we wanted to get across in this video. Thank you for watching. Don't forget to subscribe to the channel and stay safe out there during these volatile times. I will talk to you guys soon.